me. Okay, so let's go back to yesterday's question. Okay, so I'm going to finish up on Spinach Co. because yesterday we basically talked more on the revenue. Today I'm going to recap a little bit on your inventory count. Okay, so maybe I will put in another sheet, another separate sheet just for the substantive procedure notes. Okay, so how they may test you on the inventory count. Okay, inventory count. Okay. So for your inventory count, how they may basically test you is they may ask you on substantive procedures either before, during, or after your inventory count. Okay, so let's just kind of recap on what are the procedures that we have in place. Give me a moment, guys. Okay, so again, let's recap on the inventory count. Okay, so we have firstly is before. What are the procedures that we will be doing before and during and after? Okay, so before your actual inventory count, it is usually during the planning stage. So basically what the auditors will do is they will consider whether there are adequate procedures, procedures and instructions expected to be established during the test count. Okay, so this is the first thing. Just put in more space here. Okay, so other than that, this is number one. Second is basically we are going to think of the timing of the inventory count. Okay, so basically it is when, where, and basically whether there are adequate procedures. Okay, adequate instructions regarding the task count. Okay, so that's number one. Second is basically we will be talking about the timing of the count, of the inventory count. Okay. Third is basically on the locations. For example, if the client were to have 10 warehouses, the audit firm may not have sufficient resources to ensure that all of these warehouses are being visited. So during this planning stage, this is where they will discuss which of these 10 warehouses will they actually visit. Okay, locations of inventory being held. And then basically they will kind of discuss on which inventory sites or warehouses, which inventory sites will be visited. Okay, so basically, how do we actually determine which inventory site will be visited? Okay, how do we actually determine this? Do we just like close our eyes and pick randomly from the 10 inventory sites? No, we do not do this. How we will determine which inventory site we will visit is basically depending on the risk of material misstatement and the materiality of the inventory site. So basically, we will prioritize inventory sites that are, like Alia said, that are material in value, or maybe they have a higher risk of material misstatement. Okay, that is number four. And this fifth thing is basically, for example, if we are test counting inventory of, let's say, an oil and gas industry. This is a very specialized industry, so we as the auditors may not have sufficient experience and knowledge for us to actually visit and confirm the inventory count. Okay, so basically we will have to consider whether there is an independent expert that is needed here. Okay, so the need of an auditor's expert. So these are some things that we will consider before the actual count. All right, so that is before. Now let's focus on during. Okay, basically just now we've already stated that before we have already considered whether adequate procedures and instructions have been established during the test count. So right now we are checking and confirming whether did they actually follow those instructions. Okay, basically we will observe whether client staff are following inventory count instructions. inventory count instructions or procedure. Instructions. That is number one. Another thing is basically how the test count will be conducted is like we will have like this sheet, okay? We will have this sheet that basically we will agree from this sheet, which is like the list of inventory, and then we will agree it to the actual physical inventory. For example, if Toys R Us, let's say I am doing an inventory count for Toys R Us, and then basically I have this paper, okay, I have this paper which is kind of like a test count sheet that will detail, let's say, teddy bear 5, okay, and then we will go to the rug here, and then we will confirm is there 5 teddy bears, okay. So basically, these are some procedures of what auditor will actually do during the test count, okay. So basically, we will perform test counts. Perform test counts. Okay. Next is we will want to obtain copies. Okay, the main issue, the main risk. Okay, I want you guys to try to think of what is the risk here. Okay, the risk is that maybe this inventory is basically not counted correctly, or basically whatever in and out may not be accounted for properly. For example, during this inventory test count, the shop has to be closed early now. This is to ensure that there is no more stock coming in and out. Okay, so the risk is basically that stock is still coming in and out during this test count. So this whatever inventory being coming in and out may not be accounted for correctly. So what we're going to do is we are going to do cut off. Okay, we are basically going to obtain copies of the last GRN. Okay, we want to know what is the last inventory into the warehouse of last GRN, goods received note, and last GDN. GRN is basically on the inventory in, last GDN is on the inventory out, in order to confirm the cut off of inventory. So again, guys, can we recap? When I say cut off, what does it mean? What does this assertion of cut off mean? Can you guys say it in the chat box? Okay, so Alias said accounting period. Basically, yes, cut off is to ensure that all the inventory are accounted for, all in and out of the inventory are accounted for in the correct accounting period. Okay, another is we want to ensure that procedures for identifying obsolete stock, procedures for identifying damaged and obsolete stock are operating effectively. Okay, so the management, the client basically has to ensure they have their own procedures on identifying which goods are damaged and obsolete. So we have to check whether they are actually doing this procedure. Okay, so somebody asked, why do we obtain last GRN and last GDN? Okay, basically this is for us to confirm on any inventory in and inventory out. Because right now, the risk right now, let's say, usually when is the inventory count actually done? It is done during the year end, the final day of the financial period. Okay, so let's say it could be that goods that have been received in this year, okay, goods that have been received in this year have incorrectly been accounted for in the, let's say, the day after. Okay, so this is why we want to look into the last GRN. Okay, last GRN is on the purchases. Okay, let's say the purchases have been received a day before the year end. However, this because it's like a few days difference here, maybe the company incorrectly accounted for it the day after the year end. So that's why we want to look at the last GRN to confirm any inventory in, and then last GDN, okay, to confirm basically is all the goods delivered accounted for in the correct accounting period or not. Okay, similarly, if the goods have been delivered before year end, okay, right now let's say we have delivered goods here. Okay, we have delivered goods here. However, the customer received it after the year end. So when do we account for this sales and this inventory? We will account for this sales / this inventory out here. Okay, we will recognize this revenue upon delivery, and we will recognize this reduction in our inventory when we deliver goods, not when the customer receive, right? Okay, you guys are clear on this, right? So basically, that's why we want to look at the last GDN and the last GRN before the year end, for us to confirm that all goods that have been delivered and all goods that have been received kan, before the year end are accounted for in that current year. Okay, that's why we want to look at the last. Usually kan, we obtain copies of the last GRN and the basically we will use like GRN like few days before the year end and after the year end. This is a form of cut-off testing because we want to ensure that they are accounted for in the correct accounting period. Okay, are you guys clear on this? Thumbs up if okay. Basically, we are just confirming that they are accounted for in the correct accounting period, because sometimes if it's just a few days different, kan, they may wrongly account for it in a different, like in the next accounting period instead. That's why we want to look at the last GDN and GRN. Okay, so that is during. Okay, other procedures that we can do is basically we want to re-perform client's computation of the final inventory. We perform client's computation of final inventory valuation. Okay, to ensure mathematical accuracy. Next, wait, I think this one goes here. Sorry guys. This is a form of after. Okay, this will go after. Okay, basically after that, we will trace items that were counted to the final inventory sheet. So how will this work kan? Or let's say kan, every rak, every shelf kan, they will have this paper, which is the test count sheet. So we have like, let's say we have 10 shelves. Okay, so test count sheet ni, we will also have 10. Okay, so 10 test count sheets for every shelf, and then this will be kind of aggregated. Okay, it will be like macam summed up in this final inventory sheet. This final inventory sheet will be detailing all of the inventory quantities, okay, for all of the 10 test count sheets. Basically, this will be the total. Okay, so basically, we want to trace items from the test count sheets to the final inventory sheet. Okay, what assertion are we testing here, guys? Based on what we learned yesterday, when we are tracing from the test count sheet to the final inventory sheet, we are confirming on the completeness. That's correct. Okay, on the completeness. Another thing is when we want to agree, we want to inspect the final inventory sheets to ensure they are supported by inventory count records. Okay, this is basically test count sheet or inventory count records. Okay, this is basically the same thing lah. Okay, to ensure they are supported by inventory count records. Okay. All right, so next, maybe what we can do is we want to agree the sequence of the inventory sheet. The sequence number. Okay, for every one of these sheets, they will have a sequence number. Why do we want to agree the sequence? We want to make sure there is no missing inventory sheet. Okay, agree sequence of inventory sheets. Okay, basically we will undertake a sequence check to ensure completeness, to ensure that there are no inventory sheets that are missing. Okay, so other than that, basically we can also okay lah, I think this is like pretty much the most basic ones lah that we can touch on. Okay, the reason why I want to touch on this is basically we are going to be doing the next question here. The next question is basically on inventory count. Spinach Co is forecasting a year-end inventory balance. Okay, wait, let's look through this question first. The question requirement asks us to describe the audit procedures before and during the inventory count. So again, 6 marks should be 6 SPs. Okay, so when they say describe, do not forget what they're saying is basically PSP. Make sure you have your procedure, your subject matter, and your purpose. Okay, so going back to the scenario, Spinach Co is forecasting a year-end inventory balance of 9.3. The company undertakes continuous production and full year-end inventories will be carried out on 31st July. Okay, so the next point is, wait, hold on. Okay, so finished coast, raw materials, and finished goods are stored in six warehouses which are located across the country. So here pun you guys can actually state, and during the planning stage or before, and we will basically be confirming on the location. Okay, which among these six stores will we actually review and will we actually be visiting? Okay, the company has one factory site and it is expected there will be no significant work in progress held at the year end. Each inventory count will be supervised by a member of the internal audit department. There will be no movement of goods in and out of the warehouse during the counts. Okay, we have to make sure that they are actually meeting this. Sweet corn will only attend some of the counts. Okay, so here is where we will discuss on basically which location are we going to be visiting. Okay, and then we have during the largest warehouse is located at the factory site, and around 10% of this warehouse space is rented out to a third-party company, which stores its inventory of cleaning products there. So basically, their warehouse is like 90%, they store their own inventory, and 10% is rented out. So what is the risk here, guys? Okay, I think when we're doing substantive procedure, how we are going to do it can. Step one, we think about the assertion. Okay, remember assertion is basically we think of either is it Kraft or Coca. Okay, step two, we want to think of what is the risk. Okay, what is the risk? And then step three, we will basically now we are going to think of the SP to address this risk. Okay, to address and reduce this risk. Okay. Okay. So right now, this is instead of existence, the risk here is basically they may have accidentally or by error or by fraud, maybe they accidentally include this 10% of inventory, which is actually not theirs. Yeah, basically I can confirm that is right or obligation here. Okay, so again, inventory is an SOFP item, so we will be using CRAF. Okay, so this will actually give you guys a hint already which assertion we will be testing on. Okay, so let's say Alia said rights and obligation. That's correct. Here, first things first, we can confirm whether is this 10% really owned by the third party company. Okay, and another thing is basically we want to confirm that this 10% is not included in their own inventory, in their inventory valuation. Okay, it should be excluded from spinach cost inventory valuation. And the FD has explained that the third party inventory is located in one specific area of the warehouse. Okay, let's try to do this together because I feel like from what I realized yesterday is that if I give you guys to do yourself, maybe you guys are like not confident. So not many of you guys submitted your answers to me. So let's try to uncover this together. Is that okay with you guys? Okay. Hold on. Okay. Let me just open a new Word file. Let's go. So this is again SP on inventory. Okay, can you guys see my screen? Should be okay, right? Okay, so somebody asked yang right and obligation to, does it relate to rent? Okay, you don't understand why it relates to inventory. Okay, rights and obligation again. Let's go back to craft. Okay, if it is SOFP item, the assertion is craft. SOPL item is POCA. Okay, so right now kan, the risk here kan, like just now I said the risk is on the inventory space. Okay, so right now kan, they rent out this inventory space to a third party. Okay, so they rent out this warehouse space kan, this warehouse lah, I would say. This warehouse, okay, is rent out to a third party. Basically, this third party actually puts inventory, places their inventory in this warehouse. Okay, in part of this warehouse. Okay, so right now, okay, we are talking about the inventory specifically. Okay, they are renting out this warehouse to a third party, and then the third party is putting their inventory in our warehouse. So right now, the rights and obligation is over the inventory right now. Because when we rent out and then they put that inventory in our warehouse, there is a risk that the client, basically Spinach Co, when they are doing the test count, okay, because you are doing the test count in the inventory, in the warehouse. So when they are doing the test count, they have wrongly counted sekali the third party punya inventory, because their inventory was placed in our warehouse. So that is that risk that they have incorrectly included that inventory in their inventory valuation when it's not even theirs, right? So are you clear, Tika? So, okay, let's start on this question here. Again, we are basically testing on craft. Okay, be very specific, guys. SP on inventory count procedures, they asked on before and after. Okay, so how you guys present your answer is also very important. Make sure you guys break it down before and after. Okay, so before is usually on the planning stage. Okay, what are we going to obtain first things first? Okay, again, what is the first thing? Is the instructions and procedures. Remember, we are going to obtain a copy of the inventory count instructions, review them to identify any control deficiency, and discuss with management prior to the count. Okay, so I would say that the main thing right now is we are obtaining a copy of this inventory count instruction. We want to note whether the instruction or the SOP, this is basically SOP, their SOP on the test count. We want to see whether there are any deficiencies. And then right now, maybe even before that, we have to discuss with management whether the third-party inventory is stored in any other warehouses and what procedures does Spinach Co have to ensure that the third-party inventory is omitted from the counts. Okay, you guys see? We want to discuss discuss what procedures that Spinach Co has to ensure that the third party is not included as part of Spinach Co's inventory valuation. Again, that is the risk that we are addressing right now, right? The risk that they have wrongly included the third party inventory in their inventory valuation. We have to make sure that when they are performing the test count, they have only counted their own inventory, excluding this third party inventory. So another thing is, remember, there are six warehouses. Okay, so we want to decide which of the 6 warehouses, this is basically touching on the location point, decide which of the 6 warehouses the audit team members will attend. Okay, so again, how can we basically assess which one of these 6 warehouses will we attend? What factors will we take into consideration, guys? Right in the chat box. We will take into consideration the materiality and the risk. Remember, depending on the materiality and the level of risk of each inventory site. Okay? Yes, the level of risk of material misstatement of each inventory site. Basically, on the materiality and the ROMM. Correct. Next is, we maybe want to review the prior year audit files to identify whether there were any particular warehouses where significant inventory issues arose last year. Okay, so this is also part of the location point. Okay, we want to review which based on last year punya audit, we want to confirm which one of these inventory warehouses have higher risk. Okay, so we will review the prior year audit files. Okay, so now it's on the after. Before and during, before and during. So our role as the auditor is, we are not going to actually be performing the test count sangat. We will basically more of review. Okay, we will observe the inventory count process to confirm that Spinach Co staff are following inventory count instructions correctly. Okay, so just now we have already obtained the copy of the inventory count instructions. Now we are observing, did they meet this inventory count instruction? Next is we want to select a sample of inventories and perform test count. Okay, from inventory sheets to physical inventory, and from physical inventory to inventory sheets to confirm accuracy. Okay. Another thing is we want to observe the counts in order to confirm that procedures for identifying damaged goods are operating correctly and inspect inventory for any evidence of any damaged or slow-moving items. Okay, this is basically for us to confirm whether the management is accounting for any obsolete or damaged goods properly or not. Okay, next point is we want to, just now, we have already talked about discussing with management on how and what procedures do they have to ensure that the third-party inventory is omitted. So right now we want to observe the procedures carried out by Spinach Co.'s staff in identifying third-party inventories are operating correctly and review the completed inventory count sheets to confirm no third-party inventory is included. Okay, so here is actually we are also confirming on the rights and obligations like Alia said. Okay, next is obtain. Okay, remember on the cut-off, guys. How can we basically confirm the cut-off? What documents will we look into? We will obtain copies of what? Copies of last for 31st July, this is the year end, and request copies of GRN and GDN on 1st August. Okay, GDN and GRN, yes. Obtain copies of the last GDN and the last GRN for 31st July and request copies of GRN and GDN on 1st August in order to confirm cut-off of inventory. Okay, so even if you guys just say last GDN and last GRN for 31st August pun, I think is sufficient. Yeah, it's like Darwish said juga, GDN and GRN. Okay, so the reason why is we want to look at this last GDN, GRN for 31st July and the first GRN and GDN on 1st August to confirm they are accounted for in the correct accounting period. Okay, guys? So let's move on. Wait, do you guys have any questions on this inventory count procedure? I feel like inventory is a substantive procedure that is often tested because they can ask you on anything now. Like inventory is a big part lah in audit. So they can ask you possibly anything. I think the only way for us to go through this is through practice. Okay, let's move on to the next point. Okay, I'm going to share my screen again. The next point is on the issue of share capital. Okay, so Alia said is this general. Okay, so right now pun I have like applied a little bit already. Okay, if you guys see my answers just now pun, the only way that I applied was basically on the dates. Then on the dates, and I talked about the third-party inventory. So I would say that in that case, I have already done my best to apply whatever that is in the scenario already. Okay, we've talked about the third-party inventory. We've talked about the cut-off date. Okay, so that is how you will apply to the scenario juga. Okay, it really depends on the question. Okay, so the next part is on the issue of share capital. So usually pun they might ask on this, like another one of the SPs that they will ask, okay, it is usually share capital or director's remuneration, or usually this third question kan, it's usually like this now. The last SP question will consist of three or two main headers like this. Okay, and then the third one here will either be a share capital issue, a director's bonus, or they might ask you something that is not usually asked lah. For example, sales tax liability. Okay, that is something we are going to look into after this also. Okay, so right now this is on the issue of share capital. Okay, so the company is looking to expand its operations by securing an additional factory site in January 2006 in order to raise sufficient capital to fund the factory purchase. Spinach Co. issued ordinary shares at a premium in May 2005, raising a sum of 4.3 million. So I want to ask you guys first things first. Like I said just now, the first step is the assertion. Okay, so right now, what is the assertion when we are talking about share capital? Can you guys answer? What is the assertion when we talk about share capital? The assertion is CRAV. Okay, yeah. So the assertion will be CRAV. So basically, because it is an SOFP item, right? Okay, so this is step 1. So right now, we are going to look into each of the assertions. This is how we are going to think of the substantive procedures. Okay, so maybe the first C stands for completeness. Okay, I want to think about completeness. When we talk about completeness assertion in relation to the share capital, it may be that the risk is that the share capital is not recorded correctly. right? Completeness is basically on the risk of understatement, okay? Risk of understatement. So right now, the risk is that this share capital is not recorded correctly in the financial statements. So right now, let's confirm, okay? Whenever there is a new share issue, okay? Right now, this is a new share issue. Whenever there is a new share, this will flow into the, okay? This will flow into where? This will flow into the share register. Okay, Azim said kalau cerita pasal split boleh ke? Yes, that is correct. Okay, so this is how your thinking process is going to go. So Azim said on the split. Okay, when we're talking about the split, this is touching on the second C, which is classification. Okay, so the assertion of classification is basically the risk that they have not account for the split correctly. Okay, then when there is a new share issue, basically we are going to debit cash, credit OSC, credit SP. So yes, like Azim said, there is a risk that this split between OSC and SP is not accounted for correctly. Okay, so how can we actually confirm this? Okay, wait, continuing back to my point just now because I wasn't done yet. So whenever there is a new share, this will be recorded in this, okay, in this list that contains info about all of the company's shares and all the shareholders of the company. Can you guys try to brainstorm what is this listing that basically will list all the information about the company's shares? Do you guys have any idea? What is the name of the listing? This is the share register. Okay, so whenever there is a new share, we can agree this to the share register to ensure, okay, whenever we are going from here to here, we are testing or ensuring on the completeness. Okay, so next is on the classification, like Azim said just now. Okay, how can we, right now the risk is in black, the risk that this company has not accounted for the split between OSC and SP correctly. So what can we do? When we are designing our SP, we will put in mind, okay, what is the risk? The risk is that they did not account for the split correctly. So right now, what can we do? We want to recalculate. We want to recalculate the split of proceeds between SP and OSP. OSC and SP, okay, to confirm the classification. Okay. Recalculate the split of proceeds between OSC and SP, okay? Because OSC will be basically on the nominal value. Remember, guys? Okay. And then whatever excess is basically on the share premium account, okay? So we want to recalculate whether this has been accounted for accurately or not, okay? Next is basically on the, what else can we confirm on right now? Okay. Next is maybe you may think of, we may want to test on the valuation right now, okay, on the valuation perspective, okay? When we think about the valuation, we will think about the dollar amount. So there is a risk that the valuation or the valuation is basically not accounted for correctly. So this brings me back to the double entry here. How can we confirm this debit cash? How can we confirm that this share issue, that we have actually received the cash proceeds on this share issue? Okay, can you guys just think of where can we look into to confirm this debit cash? So yeah, basically we will look into the bank statement and the cash book. Okay, so again, what is the risk here, guys? The risk when we are talking about valuation is that they have wrongly accounted for the amount of the share capital. Okay, that's why we want to agree this by inspect the cash book and the bank statement for evidence of cash receipts from the share issue. Okay, so the one in purple is the substantive procedures. The one in blue is the assertion, black is the risk. Okay, so this is how your way of thinking will be. Okay, another thing when we are talking about classification, okay, so the second C here, so CREF is actually C to the power of 2. Okay, so C to, the other thing that we can think of, classification and presentation though actually. Classification and presentation. So what is our favorite ever substantive procedures, guys? That is basically repetitive for almost every scenario. Can you guys tell me what is our favorite ever SP? It is disclosure. Okay, so if this is not your favorite, please make it your favorite substantive procedure because this can apply for almost all SP. Okay, so like Haikal said, we want to review the disclosure. Review disclosure. Okay, do not stop here, guys. Right now, we will relate to the scenario. We want to review the disclosure of what? Disclosure of share issue. Okay. So right now, there is no specific accounting standard on this. So we review the disclosure to ensure it is in line with relevant accounting standards. Relevant accounting standards and local legislation. Okay. So how many points we have so far? Okay. Another thing for us to confirm these additional shares. Okay. How can we confirm this additional share is basically, okay, like I said, whenever there is something major, where will we review? Okay, whenever there is something major, and in this case of issue of share capital pun, it is something quite major. So we can look into the board minute meetings. Okay, so yeah, Najwa, board minutes. Okay, so we want to review the board minutes. Okay, so, okay, you guys are always like, I'm sure that some of you guys are confused on how do we apply to this scenario? What does it mean when we apply to this scenario? Okay, so it's not that hard, okay, to apply. The only way that we apply can, let's say if this is very general, I might say review board minutes here, okay? But if we apply to this scenario, we are talking about, right now they are trying to raise sufficient capital to fund the factory purchase. Let's try to put this in the sentence now. Review board minutes to confirm the addition of additional shares issued. Okay, when is this issued, guys? This is issued in May. Okay, so these small details I will put in my answer to confirm the additional shares issued in May 20X5 and the issue price. All right, is this okay, guys? So right now we have covered on P, which is the procedure, and then we have covered on subject matter, and then lastly we have confirmed on the purpose to confirm the additional share issued in May 20X5. Are you guys clear on this? Okay, can we try to attempt this question, guys? Is everyone okay? Is everyone on board here? Okay, since I think I've gone through it one by one, step by step with you guys, can you guys try to attempt this question? It is 4 marks. Okay, so I've definitely given you guys more than 4 points here. So I hope that you guys can complete it by 8 minutes. Yay, Amrit said yes, that's the spirit, guys. Okay, let's go. 8 minutes for you guys to attempt this question and submit in your Padlet. Okay, so I'm Natasha tanya on the reviewing board minutes to confirm the additional share issued in May and issue price. I think this can actually some of this SP, you can confirm more than one assertion. So right now, when we look into the issue price, we can confirm on the valuation. Okay, when we are looking into the issue price within this board minute meetings, we are confirming on valuation, number one. We are also confirming on the existence. Okay, we are confirming on the existence because this is firstly discussed in the board. Okay, so I would say that these two assertions lah, basically. All right. And what is the risk? Let's say if you want to think about it, then whenever there is a share issue, then share issue or issue of share capital is that this has to be approved by the board. Okay, so the risk that no approval is being obtained. This is number one. Number two, okay, the number of shares being issued. Then, just to recap again, I'm sure you guys have studied this somewhere along your ACCA line, but wherever issues of share, then companies will have a statutory constitution. Okay, so I didn't want to go into this point because it's a little bit complex maybe for you guys. If you guys don't remember, there will be a statutory constitution that the company has in place. So in this statutory constitution, it will list how much is the maximum number of shares that the company can issue. So the other risk here is risk that issue of shares exceed the maximum. Okay, exceed the maximum amount. Okay, so for this risk here, okay, I would say that this is a different amount. Okay, this is a different procedure that we can do. Okay, so if we are addressing this risk of the issue of share exceeding the maximum number, we will basically agree the issue of shares, the number of shares issued to the statutory constitution agreements agree the number of shares issued to the statutory agreements to confirm that issue of shares is permitted and does not exceed the maximum lah, basically. Okay? So this is another point. Okay, so again, I'll give you guys 8 minutes for you guys to complete this. So I'll see you guys at 9:18. Okay? So, okay, yang last ni consider as completeness ke? Agree the number of shares issued to the statutory constitution agreement to confirm that issue of shares is permitted. Okay, right now, I think that this is not really on completeness. Completeness is when we are tracing from the source documentation to the records. I think this is more to confirm on the for the existence juga. Okay, the existence. Okay, Azim? Because remember kan, for example, if we are doing PPE kan, let's say we are testing from the physical asset to the NCAR. If we go back this way to the physical asset and to the source document, this is to confirm existence. So similarly here, from the we are agreeing the number of shares issued to the source documentation. So this is the existence assertion that is being tested here. Okay, guys? I hope you guys are clear on this. So can we try to attempt this question? Okay, I see you guys at 9:18. Hi, okay, time is up, guys. Please do submit your answers to the Padlet. Let's discuss. Okay, so I see a couple of you guys have already submitted your answers. Okay, let's look through it together. Okay, so the first one that I'm going to look into is Irdinas. Okay, let me share my screen. So we have, thank you for submitting your answers, guys. Let's look into the first person who shared, which was Irina. Okay. So on the first point, we recalculate the split of proceeds of ordinary share and share premium to confirm the correct classification. Okay, so this is 1 mark because she has covered on the procedure, the subject matter, and lastly on the purpose to ensure correct classification. Or basically another thing that you can say is to confirm the split has been correctly accounted for. Inspect the cash flow and bank statement for evidence of cash receipts from the shares issued to confirm the amount of shares issued is accounted for correctly. To confirm. Okay, I think we can give this 1 mark. Okay, so next, review the board minutes to confirm that the addition of shares issued in May 20X5 and the issue price. Okay, so this is 1 mark also. Inspect the financial statements for disclosure of share issue relating to addition of shares. Yes, so this is also 1 mark. Okay, good attempt, Irina. Thank you for submitting your answers. Okay, I'm just going to pick one more person. Maybe I'll pick Ayn. Agree the new shares issued with the asset register. Okay, so kat sini this is wrong because this will not flow into the asset register. Okay, how you can pick this is agree the new shares issued to the share register. Asset register is basically like the non-current asset register. So that is for only for non-current assets. This will go into the share register to confirm completeness. Okay, recalculate the split of procedures between ordinary. Okay, this is 1 mark. The third point, review the disclosure of shares issued to ensure it is in line. Okay, 1 mark. The fourth point, 1 mark, review the board minutes to confirm the additional shares. Okay, right now, kan, you have stated review the board minutes repetitively. So like your point number 5 and 6 too, I would say it's better for you to combine it as one substantive procedures instead. So review the board minutes to confirm the additional shares issued in May and to confirm there is approval for shares issued. So number 5 and 6, maybe you can combine into one SP because if you break it down like this, you will only get maximum 1 mark or so. Okay, so thank you for submitting your answers. For the rest of you guys, I will mark later on maybe. Okay, let's move on to the next part. Next question. Okay. So CALM ni is something yang key audit method is something we are going to look into this Friday perhaps. Today our focus is mainly on the substantive procedures. Okay, so let's finish up on the substantive procedures from the other past questions first. Okay, so there's one more substantive procedures that we have not attempted here by Orlando Co. Okay, can you guys go to the audit risk of Orlando Co? Okay, so wait, let me just look at the chart. Okay, yeah, so Alia asked, will you cover audit report too? Yes, I will be covering audit. Okay, what are we going to be doing on Friday is we'll be covering audit report, MCQ, and maybe a bit of subsequent events, audit review. Okay, so we are going to be covering these areas of audit report. And make sure again for you guys to please attempt your MCQ questions. Okay, walaupun it's only 30 marks and you may think that it's not much, but it can actually help determine whether you pass or fail. Okay, so please attempt your MCQ. Again, I'll be waiting for your questions on Friday. So after that, only we will continue on audit report. Okay, so today we're just going to finish up on SP first. So for the question of Orlando here, on D, describe substantive procedures the auditor should perform to obtain sufficient and appropriate audit evidence in relation to the valuation of trade receivables. So right now, this one we can answer generally is also okay, but we can also relate to the scenario. So right now, when they talk about receivables, it is in this point here. The FD has informed you that in February 20X5, they were approached by a customer requesting a payment plan to cope with the outstanding balances. The customer is one of their largest with material amounts owing and has yet to make a payment since the plan was set up. No adjustment has been made to receivables in relation to the customer, and Orlando maintains an allowance and it's anticipated that it will remain at the same level. Okay, again, the question basically focuses on the valuation of trade receivables. So even though receivables is testing on CREF, we cannot touch on CRE. We have to only touch on the valuation aspect. Okay. So when we think about valuation of receivables, what is the risk right now, guys? What is the first risk when we think about the valuation of the trade receivables? So, okay, not correctly accounted for. Basically, first things first is the issue or the risk that is a risk that, okay, how do we calculate receivables again? Okay, when we think about valuation, maybe we can think about how do we calculate the valuation. Yeah, so some people said risk of bad debt, amount recorded wrongly, mathematical accuracy. Okay, so this is correct. Okay, risk of bad debt. So receivables, and how we calculate it is the receivable balances minus whatever allowance for receivable minus any bad debt, and then this is how we will get the net receivable balance. Okay, so there is a risk when we talk about valuation that this final net receivable balance figure is not accounted for properly. Okay, so yeah, you guys are right. For all of you guys who actually messaged me, again, just try to like put in general chat lah, so everyone else can also see your answers. Okay, it's okay to be wrong, guys, but I think that your effort in actually answering is actually playing a big important role in determining you guys pass or fail. So I really applaud of you guys for actually taking the risk of trying and actually attempting when I asked the question. Okay, thank you guys. So going back to the question, so the risk, okay, like I said here, there is a risk that allowance for receivables may be over or understated, but usually it is allowance for receivables is understated, because when the allowance is understated, the net receivable balance will be overstated. Okay, so how can we design an audit procedure to confirm or to address this risk that the allowance for receivables is understated? Okay, what is the subject matter that we can look into, guys? Number one, okay, I want you guys to put this in your head, because valuation of receivables it can come out as SP, but this answer you guys can use in your auditor's opinion, auditor's response also. Okay, so this is a very important SP here. Okay, inspect the age receivables listing. Correct, Alia. Let's go, guys. So we will inspect the aged receivables report. Okay, what is the purpose? Okay, inspect the aged receivables report to identify slow-moving balances. Okay, again, whenever we look at the report, okay, your SP kan, sometimes another mistake that students make, right now we just review the report and then we don't do anything about it. So dekat situ, that is where you can actually lose your marks. You will inspect, you have to firstly inspect, and then we will discuss with who? Who is the person who is in charge of chasing the outstanding debt, guys? We will discuss with the credit controller. Discuss with credit controller to assess whether an allowance or write down for bad debt is necessary. Okay, to assess any write down or any allowance. Okay, when there is a bad debt, we will write off, right? Okay. So basically, we want to assess whether there is any write down or allowance that is necessary. Okay, number one. So next is risk that allowance is not risk that allowance for receivables is understated. Another thing is we want to review the post-year-end cash receipts. Post-year-end cash receipts, or another word that we can say is extended post-year-end cash receipts testing. Review the post-year-end cash receipts in the bank statement and the cash book, and follow through to the pre-year-end and receivables balances. Okay, basically, we are going to look at the receivables balance as at the year end, and then we will actually compare this to the post-year-end cash receipts. We're going to check how much has the customer actually, how much has the receivable or the customer paid the client. Okay, if the after-date cash receipts maybe there's no after-date cash receipts. Okay, that is also a possible indicator that an additional allowance is required for this. Okay, so that is number two. Okay, another thing that we can think of, okay, when we think of the valuation guide. Another thing that I forgot is, another thing that will cause our receivables balance to decrease is basically any disputed invoices or any sales returns, right guys? When there is a sales return, we will debit sales return and then credit receivables, right? Credit receivables. So here, okay, the risk is right now, second is risk that the sales return or any disputed invoices not accounted for. Not accounted. So let's design the audit procedures together here. Okay, we will review, okay, whenever there is a disputed invoice or sales return, okay, what can we review, guys? We can review customer correspondence. Review customer correspondence. Correspondence for any slow-moving balances, slow-moving receivables balances, to assess whether there are any invoices in dispute. Okay, so that is the second risk here. Okay, another issue is risk of bad debt, right? Okay, maybe another thing that we can talk about is risk of bad debt. Okay, risk of bad debt. Okay, right, wait guys, I want to clarify to you guys, most of the time, okay, we don't talk about this risk in our answer. This is just your thinking process, okay? Alright guys, are you guys clear on this? This is just your thinking process. So the risk of your bad debt happening. The customer correspondence is, okay, just to be clear, correspondence is basically any way of conversation. Okay, for example, this is the client. Who is the client right now? Okay, client is Orlando and the customer. So maybe they contact each other through email or phone or fax, by letter or whatever. So this is the correspondence. Okay, any details that may actually for example, maybe the customer may, let's say if you also want to return something to Shopee, you bought something on Shopee and then you want to return this because there was a defect. So right now you will contact the supplier, right? So when you contact the supplier through the chat, for example, that is a customer correspondence. Okay, your conversation between you and the supplier is the customer correspondence. Okay, so in this case, we review customer correspondence to assess whether there are any invoices in dispute. Okay, so for example of invoice in dispute is maybe because there is a return of faulty products. Okay, clear on that point, guys? Right, so another thing that we can look into, what can we review to assess whether there are any material disputed receivables, or basically if the customer is facing any financial difficulties, what can we review, guys? This is touching on the risk of bad debt. We will review, okay, this is basically whether when the customer is facing any financial difficulty or there are any disputed receivable, we will review the board minutes of Orlando. Right now it's Orlando, right? Review board minutes of Orlando to assess whether there are any material disputed receivables. Okay. So this point here purpose ni, the purpose at the back can basically change. Okay. Just in case if your purpose is not exactly the same as mine, but it is still relevant and it's still acceptable, then it's okay. For example, we can say that to assess whether there are any material disputed receivables, or maybe we can say to assess on likelihood of customer making the payment, of customer paying the debt. Okay, all right. So it can be any purpose that is relevant in this case. All right, guys. Or another thing here to assess whether there are any invoices in dispute or any issues regarding customers' financial difficulties. This is just an example. Okay, so either one is all right. Okay, so right now we've touched on a few here. There's definitely more than 3. Okay, so 1, 2, 3, 4. All right. Another thing that we can do is we can obtain the debtor aging report. Okay, I don't know. Okay, the next is on the risk of wrong calculation. Okay, risk of wrong calculation. So what will we do, guys, if there is a risk of wrong calculation? What do you guys think? We will re-perform the calculation. Okay, we will obtain the debtor aging report. Okay, even in the debtor aging report, there will be like a breakdown of all of the receivables and how much they owe, right? Obtain debtor aging report and perform recalculation to confirm mathematical accuracy. Okay, are you guys clear on these points here? Clear? Can we try to attempt this question pula? So right now there are 5 points. Can I give you guys how many minutes? Can I give you guys another 8 minutes for you to try to explain 5 points on the valuation of trade receivables? Why am I asking you guys to do this? It's not for fun, but because again, valuation is a very important aspect that can be tested not only in your SP but also in your auditor's response. So what does this mean is for each one of these answers that I have elaborated, you can actually put it under your auditor's response also. Okay, for example, here, right? This is the audit risk. When we are doing this audit risk question, the risk here, the risk here is that the customer requests a payment plan to cope with outstanding balances, and the company is one of the largest with material amounts owing. So we have discussed that there is a risk of irrecoverable debts. Okay, and the receivable and profit may be overstated, allowance may be understated. So we can talk about, for the auditor's approach, we can use the same point here. Okay, we will usually do this. We will take this point, discuss to assess any allowance, and we will review the post-year-end cash receipt. So these 2 points will be used also in answering your auditor's response. So I want you guys to try to practice on this. So I'll give you guys 8 minutes to 9:48. Please submit your answers. While you guys do so, I will mark your previous answers from just now. Okay, so see you guys at 9:49 with your answers on the Padlet. Okay, hello guys, let's discuss. Okay, I've basically gone through some of your SP questions just now. Also on the SP for shares for some of you guys. I want to like a little bit like go through it a little bit more just in case to clarify. Okay, for example here kan, so I didn't manage to like look through all. But okay, let's say obtain the share register and agree to the new shares issued. Okay, this is wrong because we will go from it's actually the other way around. We agree the new shares issued to the share register. How you arrange your sentence is actually very important too. Okay? Because if you are going from the share register to the new shares issued, it's like you're going backwards. So this is more to confirm the existence. Remember? Okay? So you should agree the new shares issued to the share register to ensure completeness. Okay, another thing that I wanted to touch on, okay, what is the difference between casting and calculate? Okay, because some of you guys got it wrong, so I just want to clarify. Okay, the audit terminology for the procedure, okay? Remember PSP? So the first P on the audit procedure, this is also equally as important. You have to make sure you use the correct audit terminology. So the difference between cast and calculate. Okay, I want to touch on this because I think that it can be a bit confusing. So the difference is when we are casting. For example, if we have a list right now, okay, we have a list okay, right now this is the invoice. Okay, invoice, we have, let's say we are buying eggs, butter, and bread. Okay, so this is 10, 10, 10. Okay, so if we were to cast, we would just total this figure up, 30. All right, so this is casting. Okay, however, if we were to use the term of calculate, this would be more, I would say more in-depth. For example, if we want to recalculate the invoices, we can also use this point here. Okay, we want to recalculate invoice totals. Okay, we recalculate invoice totals, including the calculation of any sales tax and discounts. Okay, so from this total here, we will deduct any sales tax and deduct any discounts. So when we calculate this whole total here with the sales tax and the discount, and we are going very in depth on the calculation, that is calculate. When we cast, we just total out. Okay, so I want to basically confirm this. Okay, because just now some of you guys said cast on the issue of share. So that when your audit terminology is wrong, there is a possibility that the auditor will not give you, the examiner will not give you marks also. Okay, so I hope that you guys are clear for each of the procedures and their meanings, the definitions basically. Okay, so going back to Orlando. Okay, so I see that a lot of you guys have submitted your answers. Thank you again, guys. Let's look into, this first mischievous person who did not put their name. Maybe you guys should put your name, so later if I mark, then you guys can review it again. Okay. Review customer correspondence to identify any balances of receivables which are in dispute or unlikely to be paid. Okay, this is 1 mark. Review board minutes to assess whether there are significant disputed receivables and the likelihood of customers make payment. Okay, this is 1 mark. Okay, your sentence here maybe you can fix significant disputed receivables balances. Okay, and the likelihood of the customer making payment. Inspect the age receivables report to identify and discuss with the credit controller to assess the adequacy of allowance. No. Okay, there's no T there. Okay, so this is 1 mark. Okay, I'll pick one more answer. Okay, let's look into Liza's answer. Inspect age receivables report if there is any additional. Okay, so 1 mark here. Review the board minutes to assess whether there are any material disputed receivables. 1 mark. Okay, review the correspondence and customer for any issues of financial difficulties. This is also 1 mark. I think I would like to add on to your last point here. Review the correspondence between Orlando and customer for any issues of financial difficulties. Wait. I don't know why my keyboard is like covering half of the screen, so I can't really see. Review the correspondence between Orlando and the customer for any issues of financial difficulties. Okay. Which may indicate that additional allowances are required. Okay. Okay. So All right, so the other answers, maybe I will review later on. Is that okay, guys? Okay, so let's go on to the next point so we can try to like do more questions. Okay, don't worry. I think from now on, I will try my best to review all. And so make sure you guys can just look back into the Padlet later on for you guys to confirm um, on, on how you guys did for that question. Okay? And let's say if I miss out your answer, don't hesitate to just contact me if you guys want me to mark your answers or anything like that. Okay? So this part here on the rights issue of shares, this is also general, and I think we've touched on this just now. So instead of going into this, can we proceed to the next question? Maybe you guys can attempt this yourself. Okay? So the answer for this will be more or less just the same as our previous answer. Okay? Next is in relation to Hardcore's director's bonus. This is on the question of Hardcore for your audit risk. Okay, can we finish up on this one question before we go on our short break? Okay, guys, let's go. So let's look into the director's bonus. Okay, so do you guys think that when we are answering this SP, is it general or is it specific, guys? Is it general? Do we apply to the scenario? So can you guys type in the chat box? Okay. So you guys said specific. Okay. Again, I want to clarify with you guys. Okay. Whenever the SP question is actually a part of another question. For example, right now, okay, this is an audit risk question. So if the SP is another part of another question of an audit risk question, for example, in this case, this is where you guys can answer in a more general way. Okay. So yeah, like I said just now, it is better for you guys to relate. But I think that even if you guys answer generally, it's okay. They will not wrong you. Okay. In comparison, if let's say the question is like very specific, like then we have 3 questions. So the third question will be one question. For example, it will be like spinach cone kan. This question is specific on substantive procedures. Okay. In this case, you have to be very specific and you want to apply to the scenario as much as you can. So tadi kita buat macam general ke miss? Macam Orlando tu. Yeah, even Orlando pun we did general, right? And we didn't really I think we didn't really relate to the scenario pun. We did more general. Okay, so when it is part of another question, for example in this case kan, in Hardcore ni, and even in Orlando pun, it is part of the audit risk question. So if it is part of an audit risk question, it is general. For example, macam Orlando, and yesterday we also did on Darjeeling. Okay, so when I say it is general kan, it does not mean that you are restricted to this. No, but basically there is more freedom for you guys to write. Okay, there's more freedom on you guys to write. You don't have to specifically relate to the scenario only. Okay, so are you guys clear on that so far? Okay, on this point here, because I know that most of you guys will have this difficulty on how do we apply, right? So sometimes kan, if let's say when you are reading this question kan, from here kan, maybe kan, if you are focused so much on like trying to apply to the scenario kan, you might not have ideas to actually talk about as compared to if you're thinking, okay, I can answer generally, right? Correct, right? When you have to think of applying to the scenario, then your brain will automatically macam lagi jam. Okay, so I would say that I think it's better for you guys to just answer generally is okay, right? Even if they have mentioned the company's name in the question ke, what does this mean? Memanglah dia ada the question the company's name in relation, or for example in relation to the valuation of trade receivables of Orlando Co, for example, like that kan. Yeah, you can basically be general. Okay, you can be general. For example, here pun kan, Hardcore's director's bonus. Okay, so I will show you guys how we want to answer this question, and you guys will notice that we did not even really relate to the scenario. Okay, we will see in how we answer Hardcore. Okay, so even in Hardcore ni, they have talked about okay, this part here. Hardcore's directors correctly disclose. However, local legislation requires more extensive disclosure on the director's remuneration. Okay, and they do not intend to provide the additional information. Okay, actually, the scenario is just giving you guys a hint of what you can possibly include in your answers. But you are not restricted to this. Why are you not restricted to this? It's because it's a very short paragraph. Okay, it's a very short paragraph, and you will not be able to extract that much from the scenario pun. So that's why you can give your answers generally pun is okay. Alright? So when we're talking about director's bonuses, where will this appear? This director's bonus. Okay, it is where will it appear basically? Can you guys tell me where will it appear? How will it be presented? It will be presented as part of the payroll. Okay, part of the payroll and on the disclosure. It will be disclosed. Okay, in the disclosure to the notes. Okay, so right now, okay, now I macam dah fikir juga, how are we going to relate to craft? Okay, right now, there's a lot of possibilities that we can talk about. I think that this is, if this director's bonus is payable as at the year end, okay, if it is payable as at the year end, then that means that the company has yet to pay this bonus. Then it will be a liability, right? It will be an accrual. Okay. However, if this has been paid, basically another thing that we will do is we will expense it as part of their payroll. Okay. And then another thing is, okay, so let's think of what is the risk here. Okay, just now they have already stated it in the scenario, right? The risk of disclosure incomplete. Okay, risk of disclosure being incomplete. So when we are talking about the disclosure, just same thing, we will review the disclosure being made. Review disclosure being made for the director's bonus to ensure they are in compliance with the local legislation. Okay, is it in line with local legislation? Local legislation and relevant accounting standards. Okay, so what else? Okay, the risk on the assertion of completeness. Okay, I think risk of disclosure incompleteness is on the presentation slash the disclosure. Okay, presentation slash the, okay, they actually can classification, presentation and disclosure falls into the same category. Okay, but usually I just call it classification. Okay, it's classification, presentation slash disclosure. Okay, so another thing is on the completeness. The risk that there is a risk that the director's bonus, okay, when we are testing on completeness, what is the risk, guys? Risk that the director's bonuses have been omitted or have not been recorded. Okay, so when we think about completeness, kan, I want you guys to always go back to how does the cycle work. Okay, how does the cycle work? Okay, right now, kan, review, what can we review first? We can review the director's service contract, or wait, instead of service contract, I think we can talk about their letter of offer, something like that. Okay, letter of offer. So this will be the source documentation where they will actually tell you how much is this director entitled to for their bonus. Okay, we can confirm this bonus here. Okay, we can confirm the bonus. Okay, wait. This director's service contract, from here, where will it be recorded? It's basically they will have a list of the director's bonuses. Okay, they will basically total up all of the director's bonuses. List or whatever's casual. Okay, I like to use the word of casual because usually that's what the examiners used to. Casual of director's bonus. So this is like basically where they total up all of the director's bonuses. Okay, from this casual, okay, this will flow into the payroll records. Okay, payroll records, and finally this will also be disclosed in the notes. Okay, so this is the entire cycle, I would say. Okay, so when we are testing on completeness, kan, another thing that I want you guys to think of is using the obtain, cast, and agree method. Okay, you guys still remember the obtain, cast, and agree method? This is especially important especially useful for almost every substantive procedure, especially when we are testing on the completeness. So in this case, we want to obtain a schedule of director's bonus. Okay, obtain a schedule of director's bonus. Basically kan, it's just like what schedule here kan? Obtain X kan. X is the schedule of what? Okay, obtain a schedule or a listing or a breakdown of what are we talking about here? The director's bonus. So it's very easy. You guys can apply to almost any SP. Obtain a schedule of director's bonus, and then we cast and agree to the amount disclosed. Disclosed in the financial statements. Okay, so this is our SP. This is how we will design this SP. Okay, so another thing is on the valuation. Okay, the risk that the valuation is incorrect. Okay, risk that, when we talk about risk of valuation, is basically risk that the bonus payment not calculated correctly. Okay, so what can we do, guys? Can you guys tell me what can we do when there is a risk that the payment, the bonus payment, is not calculated correctly? We will recalculate. Okay, we will recalculate. Yes, Udina. So we will recalculate the bonus payment Okay, we cannot just stop there, and we want to agree to supporting documentation. Supporting documentation. And the director's service contract here. And the director's service contract or director's letter of offer. Recalculate and agree to supporting documentation and director's service contracts. Okay, basically we will refer to the director's service contracts and any supporting documentations in the calculation of this bonus payment. Okay. Another thing on the valuation guide is the risk that, okay, we want to confirm risk that the cash receipts, risk that a cash payment is incorrect maybe, or maybe there is a overpayment of cash. So when the risk includes cash payment, okay, what will we review, guys? This is a fairly simple one, right? We can confirm the amount of bonus paid by agreeing to what? To each director, yes, by agreeing to the bank statement and cash book. To each director, by agreeing to the post-year-end bank statement and cash book. Okay? Okay? Wait, let me just look through the scenario. What else did they say? Is that all? Okay, another thing that we have, okay, how can we relate to the scenario? Okay, has indicated that the directors are very pleased with the forecast performance for the years, as the directors are paid a bonus based on a percentage of profit before tax. Okay, again, when I'm telling you guys, you can answer generally. Okay, for this question, you guys can answer generally, but you can also use what is given in the scenario as an added point. Okay, so again, there is more freedom because you guys can answer generally or specifically. Okay, so right now, I want to talk about this point here. Okay, the directors are paid a bonus based on percentage of profit before tax. Okay, so when we are confirming this, okay, we want to recalculate or compare. Okay, basically there is a risk that, okay, this is continuing on this point here lah. There is a risk that the bonus payment is not calculated accurately. Okay, so can I continue here? Sorry, my points are a little bit all over the place. Okay, we want to relate to the scenario. We want to compare the profit before tax, because the bonus is based on the profit before tax. Compare profit before tax used in the bonus calculation to the final profit before tax figure to confirm whether any adjustment is required. Final profit before tax figure to confirm whether any adjustment is required. Okay. Alright. So another thing is on the director's bonuses ni. Usually another thing to add on lah, right? Whatever significant things that require approval, such as director's bonus. Okay, the amount of the director's bonus, who will be the one who is setting this director's bonus, guys? Can you guys write in the chat box? Who will be the one who determines how much bonus is being paid to the directors? Are you guys still there? So the answer is remuneration. Okay, Aliyah asked remuneration committee ke? Okay. Yeah, usually it's remuneration committee. So actually remuneration committee can also can be used as your answer tau. However, yeah, so people say NED and remuneration committee. Yeah. Okay, so that one is more specific lah, okay? But when we are reviewing SP, okay, on the director's bonus ni, we will just review the board minutes. Okay? We want to review the board minutes. So Irina said board of directors. Yeah. In this case kan, if let's say you want to write remuneration committee pun actually correct juga. If let's say the director's bonus is set by the remuneration committee, you can say that the minute meetings of the remuneration committee. This is an example. But usually this will usually be determined by the board of directors unless the company specifically says that they have a remuneration committee. So usually it is just set by the board. So this is where we will review the board minutes. Review the board minutes to identify whether any additional payments relating to this year have been agreed for the directors. Okay, basically in this director minutes is where they will agree and approve on the bonuses for the directors. Agreed for directors. Okay, so this is vaguely on the director's bonus. Okay, and again, what is our another thing that we can confirm kan is our added point is basically on the written representation. Okay, I want you guys to try to learn on how to write written representation. Okay, obtain a written representation. Written representation is basically just the management acknowledging their responsibilities. Obtain a written representation from management confirming that they have confirming the completeness of directors' remuneration including bonuses. Okay, so I think we've given like quite a few points. Written representation is more of just an added audit evidence. Okay, it is more to support whatever sufficient audit evidence that we have obtained. That's why your written representation answer will always be the last and final answer. Okay, last. Since I've already noted on the payroll records, okay, just now here, from the schedule of director's bonus, we will agree to the payroll records. So let's add on another audit procedure that we can talk about here, is we will agree the individual bonus payments as per the schedule of director's bonus to the payroll records. Okay, so what assertion are we testing here, guys? When we agree the individual bonus payments to the payroll records, what is the assertion we will be testing? We will be testing on the completeness. Okay, let me just charge my iPad. Okay, moving on to the last point. Okay, just now I said that if this is a payable amount, if this liability or if this director's remuneration is yet to be paid. And if it is payable, then if it is payable, how do we account for a director's bonus that is payable? Can you guys tell me what is the double entry? Basically, we will debit accruals. Salah, debit accruals, not. Sorry. Debit payroll expense, credit accrual, right? We will credit bonus accrual. Okay, this is if this amount is payable. Okay, so basically we want to review whether they have correctly accounted for this or not. We will review schedule of current liabilities and confirm that the bonus accrual is included. Schedule of current liability and confirm the bonus accrual is included. This is also to actually test on the completeness. Okay, guys? Before we go on break, can I just ask you guys, so do you guys think that this is a better way of us studying on this substantive procedures? Is it okay if I just do notes like this instead of I type? What do you guys think? Maybe I just do notes like this, and at the end of the class, I will just give you guys the written version also, because I feel like it is more clear for you guys to got. That's why I'm doing it this way. Okay, so yeah, I think that we can see the picture better, right? I think that yesterday, because I typed, you guys like macam jam. Correct tak? Okay, so that's why I tried to switch it up a little bit today. That's why I just wanted to check if you think this is better, then I will continue in this way. Okay, thank you for your review. Thank you, Alia. Thank you, Ashikin. Okay, lagi nampak, right? Okay, Alhamdulillah. That is what I want to hear. Okay, guys, I really hope that you guys can try to picture it and see it more clearer. Okay, so maybe now it's 10:22. Let's go for a short 15 minutes break. So I'll see you guys at 10:37.